Hello, hello, hello. Happy Monday, Fed week ahead. How is everyone doing? Good morning, Patrick. Good morning, Jacob. Good morning, Anissa. Good morning to people in the background. Good morning. Happy Monday. Sort of a quiet week. Friday was, wow. Said I was watching for a choppy day. We definitely got momentum bars continuing in the open. VIX spiking on Friday. That fell into one of the 20% days that aren't choppy on expiration. I hate, especially the quarterly expiration days. Everybody knows that. Who's tuned in for a while, and we definitely had one of those days, although the momentum was nice to the downside. But no major reversals continuing Friday into the close. Hello, Eric. So, we'll see. We'll take a look at what's if we're going to pause going into the Fed pause. And remember, press conference will be more important, but that's not till Wednesday. So far, not much today. We got the housing market index. We got some bill auctions. Not much going on. Tomorrow, we got building permits, housing starts, and not much. But Wednesday, crude numbers as always. Then we get, I mean, at this point, it's fully priced in for a pause. But the press conference at 1:30 Central, 30 minutes after the rate decision, will be what is key. I don't, what's he going to say? We're going to be data dependent, and if we need to hike again, we will. Otherwise, we will continue a pause for longer than people think. There we go. We don't need to pay attention on Wednesday anymore. Thursday, unemployment numbers, as always. We got the Fed Philly indices, existing home sales, CB leading index, which has been in contraction for a while. So again, quiet day there. Friday, finally a Fed speaky after the rate hike and after the rate pause and after meeting, and then nothing. Global services PMI and manufacturing. So a very quiet week. Even the FOMC, it's pretty much baked in as a pause. So we don't have to worry about that. It's just a press conference. Nvidia down finally Friday triggered, officially was the trigger with the down close of the double top. Chips down. There's some stuff from Taiwan Semiconductor this morning, sort of mixed with the other mega caps. Oil and energy still strong. Oil hovering near recent highs. You see, energy is pretty much the strongest sector, and then healthcare and consumer defensive are slightly positive. Technology and consumer cyclical rolled over, which really rolled over on Friday. You see here 99% for the pause on September, and then continuing the pause through next May, first cut next June. So, still in neutral mode. So we dropped from the borderline of greed to neutral back into more central neutral, but still not anywhere close to fear mode. Is the market is crashing? The market is not crashing. This is not a crash. You'll know when it's a crash. Stitch Fix today, very minor after the AutoZone, one of my favorite stocks actually. Tomorrow morning at the open, very quiet. General Mills will be interesting from, again, the inflationary standpoint, what they see. FedEx from the consumer, and what's going to happen going into holiday season. That's going to get interesting too. And that's really it. I mean, we don't have not much going on. Remember, we're heading into the next quarter earnings, so these are just the remnants of the prior quarter. All right. All right. Let's get to it. Here was we had the little flagging pattern, little mini double, and then it turned into a flag, and then the mini double was invalidated. The mini double was invalidated with Friday's price action. We're headed into some pretty key support now from the bigger double that hit the first target. Remember, 44.73.25 on a closing basis is key. A close below that would invalidate the final two targets on this double. If we go into a sort of a Friday mode again and trade it below 44.48.50 intraday, it would also invalidate the prior two targets. Other than that, I'm watching. We're in that area that there was a little short-term buying pressure back on the 7th and the 8th. Okay, so I'm seeing if this holds. The real key level is actually the low from the 7th, coming in about 44.83. Below 44.83, I'm paying attention to 44.73. And then the next key area before 44, 48.50 would be there's some significance right at 44.62. What's the difference between VIX futures and VIX? Oh, VX futures. Well, the VIX is the just the index of VX futures, which I do not look at. That's the volatility index futures. That's where you're trading the actual futures contract. You have to trade something against the VIX. You can trade a number of things against the VIX, but that's the futures contract related to the underlying VIX that you have to roll on a regular basis. So you can't just go, I'm going to buy. You have to buy or sell the VIX via either options or, I mean, there's proxies with ETFs. You could trade the VIX a lot of ways, but you can't just go, I'm buying the VIX. I talk about it because there's so many ways to trade it. Like VIX is very low. That's where you can put on hedges with the VIX very low because the VIX feeds into the volatility component for a lot of things. Hey, Christoph. So that's where we sit right there. That's pretty much it. On a rally, I'm paying attention to Friday's close, 44.98 to 4,500. Above there, it is right above about 45.05, 45.06. It is into a pretty aggressive clear path move, and I will watch for about 45.40 as a key level. 45.40. And then, let's see, above that would be back to 45.66. So those are the key levels to the upside. The NASDAQ, which has not hit the stop level. So if you're still on the official invalidation level, it's a long way off. It's back down about 15,100 to invalidate the pattern. You're also coming into a fair amount of trend line, bottom channel line support in this area. Based off a key area between the last little run up, between about 13,325, which is the 50% of the retracement from the lows on Friday to the highs, lows on Friday, August 17th or 18th, to the 1st of September. The 50% level, and everybody knows how key that is if you've tuned in here for a while, 15,330. Now, anywhere between that and 15,198 or 199, I'm watching for some reversals to hold. Today, I'd be focusing more if we do break below this 15,330. I'm watching closer to right around 15,280 to 285. So that's it. On any bounce, first will be Friday's close because it was a very emotional close based off the option expiration and the momentum, 15,392. And then my next target above there is 15,475. Above 15,475, the next key target area is about 15,490 to 15,500. And then there isn't much until 15.7, and you're into the clear path move. Okay, this was the momentum bars on Friday. The Dow, this is why I'll give you a clear example of why I hate triangles. Because does a triangle break through the triangle and they don't test out very well? You know, it's like 49, 51% depending on the direction. But look. See, the triangle broke out, slamming into the horizontal key resistance and then reversed. That's why people love to look at triangles, but they test out horribly. That's why I'll put them on charts, but I don't rely on them for any kind of entries because they're very unreliable. That's something you should take note on, and if you're going to research it, do the research. Just keep in mind that's what is proven out. And this research was done and revalidated multiple times. It was first done concluding in 1994. That was the first time. that all this testing was done back on triangle patterns. So this has been validated many times since. So they have not changed. Then you can look back and say, oh yeah, it broke out of the triangle, but that's only when they continue. Otherwise, you have too many stopping and reversal points. So the Dow trading against key support about 34,930. Next key area is about 34,850, and then 34,800. I'm going to bump this up right around there. To the upside, you have some pretty significant resistance right around 35,050. And then you're into a really about 35,001, and then into the clear path move back to 35.3. Yes, this is a little mini double bottom so far headed into the open on the Dow. So that's the only thing. I'll be watching to see if we get a 1 hour close above 34,993. The Russell just still holding the very key support. Got a little buying pressure end of day Friday down here, but very minimal. So this is very key. Again, if the Russell breaks 1855, not good for the Russell. Not good at all. Really, at this point, has to get a close before I'm considered more bullish mode above about 1892. Why ES hit the first target and rolled over? Because there's a lot of selling pressure. What do you mean? Why did it hit the first? It's why we have a first target. Because not every pattern works completely, but it's still valid. See back here, it hit it. Again, the invalidation point isn't until it closed below 44.7325. This could easily come back up still and hit it, and hit the final two targets. But that's why we have targets. That's why the pattern is the way it is. So grateful for your research. As you do not have time for skill, as that's why I'm relaying this information. And people are free to vet it on their own. I'm just trying to let you know, especially because so many people tout triangles, and they're very, very unpredictable. So don't get caught up in that. That's why I'm relaying that information. If you find something that tests out really well, let me know. I just haven't found it as related to triangles, whether they're ascending, descending, you know, with a proper triangle, whatever you call it. VIX still held some very interesting support, but still not above 1481. Still keep an eye, especially if we close today above 1480, 1481. We have not closed above that level. The last close above the level was back at the end of August when we started breaking really down to these recent lows. Then we popped up here at 7th of September, but then we reversed back down. So really pay attention to where we close today if we do sell off. Otherwise, I'll be watching the lows today over the next few days if we break back below this, especially after the Fed meeting. The DAX is just caught in a big congestion pattern right now. So for me, it's only looking at short-term stuff, and there aren't a lot of great setups right now. And when there aren't a lot of great setups, I pretty much ignore the market and look for markets that have good setups. Now, this little mini double is still slightly valid. It's fading quickly, so I'm not counting on it ever triggering. This did not rotate enough to invalidate it. What's interesting, though, is the 10-year note is dropping. I'm watching for today and tomorrow if it does retest the lows from Wednesday, September 13th, coming in at 109.03. We break through there. We have a major area at 108.26. So, has not been able, besides this little brief pop above the rotation zone, the rotating again from 2 Fridays ago when last Thursday. Yields are still climbing. If you look here on the yield chart, we still have a valid potential double top on the yield chart. All right. If it does break out, that'll be interesting going into the Fed meeting. This is where I will watch 4.396. Then anywhere 4.35 to, if I can see the line, 4.46 as the major area. All right, but this is still, remember, the potential double top is a long way off from triggering. But this is interesting with the 10-year yield still climbing, testing the highs from August 22nd. So if they break out, 10-year yields, look, and remember, this is the highs from last October where we had started to get the major market bottom. So we're testing that key area again. This is very significant. 10-2s, not much. Dollar, still holding, still letting the rotation zone catch up. So I'm really paying attention to see if we break above last Thursday's high. Key support, I'm watching about 104.70 to about 104.60 for support on any pullback. But if we break, the next key target is 105.50, which could be testing the highs from March. And if it breaks out above there, wow, that'll be a very interesting breakout. Crude, still overbought. Still, remember, overbought can continue overbought. Hit the 50% harmonic today. 50% harmonic. Next key level above that's 92.61, but I'm watching for at least some kind of pause up in here. So this is a really good area from my perspective to trail from longs. Support coming back in right around 88 now. So even it would just be an orderly pullback to 88. And nothing really. This would just be a minor topping pattern. Natty gas, still in the middle of the range. Nothing to talk about there. Gold, not much to talk about right here. We came back down, hit the 87.5. Is this a valid double? Let's just check it out to remind ourselves. No, it's not on the daily. And on the 4-hour, it's a little iffy. But that's a long way off. We'll just keep it on for the 4-hour pattern. But there's otherwise not a lot of fantastic setups in gold right now. Let's just skip to get to some other stuff. The 10 years for the JGBs still pausing. Not much to talk about there. The yen pausing at key resistance. Remember, I'm still watching for a potential break to 148.85 higher. But other than that, not much. Euro, not much. Pound, which is below the 200. Pound below the 200. On any rally, key resistance now is 124.35. The key support, though, the key next level of support is coming in at 123.80 about. So it's going to get pretty interesting to see. I'm watching for continued weakness after any. If we do have a bounce, I'll watch for a rollover pattern there. NVIDIA, let me hit this and then we'll get to spiders and Qs. NVIDIA, the double top, which was confirmed, which had the lower probability trigger, as asked by Options 22 last Tuesday. Then I said I'd be watching for a bounce and a rollover. We got the bounce and the rollover, and Friday's close officially triggered the double top with the higher probabilities. The next target's 428 roughly, and we're trading below that pre-market. So this is going to hit the next or the first target on the open. Then we have 417.43 and 406.95. So that has officially triggered. The spiders and the Qs. The spiders, which hit the second target. The invalidation point for the spiders now for the final target is 447. 440.76 on a closing basis. On a trade through intraday basis, 438.18. Right now, trading right around this key critical support. Looking to open right around Friday's close. The key area I'll be watching intraday on this is the low from the 7th of September, 442.75. We break below that. it's then that 440.76 comes into play. To the upside would be the gap fill, and then let's see what the targets are. Let's see if we have any good solid target area. Right around 444.85 to 444.90, and then we're looking at about 447.25 to the upside. But the pattern is still hanging on. The Qs, which hit the first one, the invalidation point for this is not till 364.51 on a closing basis. I'm still watching the low from 7th of September. 7th of September, 369.15, right around the area of the 50 EMA. So that's a critical low. Right now, trade looking 369.45. So on any rally up, we'll pay attention to 369.86, and then especially 370.81, which would be the gap fill to Friday's close. The next higher level is 372.61. The key support level, should we break through the low from Thursday, the 7th, is 367.77, which takes us to the 50% harmonic from the run-ups. From the low on Friday the 18th to the high on Friday the 1st. All right. So those are all those levels. Hey, Sterling. Hope you have a wonderful day. Let's see. Tesla. Slight gap down. So if we get in any bullish mode would be to 274.39. We still have the little mini double top in play. Let's take a look. It would need a close, at least on a 4-hour basis, below 266.60. And that would possibly be for a backfill to 254.30. And then if it continued to the gap left behind from Friday the 8th. So that would be to 248.45. Other than that, the probabilities, unless this triggers and we get a little backfill play, that wouldn't invalidate the possibly higher probabilities still. The higher probabilities are still the 288.42 for the 87.5 rule. So that would trigger a pullback, and then I'd be watching for key support. What would really I'd start looking for more of a bearish mode as we get back below 245 again. All right. What else? That's really, that's really about it. Apple has a little mini, which I'm keeping an eye on this morning. Apple has a little mini double bottom, and this was not big enough rotation to invalidate the bigger double bottom. It is so. The first thing I'm watching for, though, is Apple if it gets a 4-hour close above 176.51. It is against the 4-hour rotation zone, so the probabilities are slightly lower, but that's what I'm keeping an eye on there. Because then if we've got something like a bounce there and we could get some strength in some other of the mega caps, we could see a bounce back rally at least. So I'm really watching Apple closely this morning. With that, I think that's good to go into the open. Remember the S&P, it's in the area of a lot of buying pressure. You see from the 6th, the 7th of September, the 8th of September, the 13th, and the little where we hit the lows on Friday. So this is very key. That's why these lows from the 7th are very critical if it's going to maintain. If it starts breaking there, it could get interesting because all the buyers right in here, it's now rolled over between all these lows. So pay attention to that, very key. This is when I will pay attention to a very key low. Other than that, hope everyone has a wonderful, the NVIDIA short is triggered. Yes, I just went through that. The NVIDIA short triggered with the higher probabilities on Friday. The lower probabilities were triggered last Tuesday. And it's opening at the first target this morning, or even below the first target. So yes, it is still valid. With that, I shall talk to everyone later. Have a wonderful trading day. And if you can't tune in more this week, have a wonderful trading week. And I will see you all later. Bye for now.